And as Dave put it, you guys killed it, right? These numbers are really, really impressive. Shareholders should be happy. But looking at the outlook, I'm actually very curious about how positive you are on China. We had some pretty horrible domestic activity numbers out yesterday. The PBOC seems to be pivoting a bit. We've got these twin drags, right, of property, of COVID zero. So tell me what you're seeing that economists are not.
Well, so look, thanks for the question. It was a strong set of results. If we turn to the outlook, really what we're saying is that against a backdrop of slowing global growth, we think China is going to be a tailwind on growth. We can see positive growth supportive policy settings in China as they come out of COVID lockdowns, a bit of stimulus in the months ahead. We think that over the next 6 to 12 months, China, if anything, is going to provide some stability to global growth and will help offset some of the slowing that we see elsewhere.
At the same time, though, you're still building this war chest for these future-facing metals, but it's tough going finding opportunities, right? You were rebuffed by OZ Minerals, you were outbid by Twiggy earlier on the year for the nickel project. So where are you seeing opportunities? Are prices still too elevated at this point?
So we are seeking to grow in future-facing commodities, specifically potash, nickel, and copper. Last year, we triggered the first phase of the Jansen project in Canada. So Jansen Stage 1, $5.7 billion US. It'll be our first project in potash, but it opens up a pipeline of really attractive future growth in that commodity. If I come to copper and nickel, BHP holds the world's largest endowment of copper, second largest endowment of nickel sulfides, which is the more attractive of the types of nickel that are out there. And we're looking to accelerate the development of new options within the resources that we have. We've increased exploration spend. We've become more commercially nimble in getting toehold positions in some undeveloped resources. M&A does remain a lever, but as you saw with Noront last year, we will remain super disciplined on this front. As to OZ Minerals, we've put on in front of them a non-binding indicative offer. Very compelling offer, we think, for their shareholders. Over 30% premium to last trading day, over 40% premium to 30-day VWAP. Very disappointingly, they've chosen not to engage. But as I said, it's but one of many options for us to look to grow in these really attractive commodities.
What are the other options for copper, though? Because there doesn't seem to be a lot of compelling, politically stable options out there. So would you go back to OZ Minerals?
Well, so in copper, as I said, BHP holds the world's largest endowment of copper. We have the world's largest copper mine in Escondida. Over the past 12 months, we've looked to accelerate studies where we bring this great underlying productivity performance that we're unlocking in the business, together with innovation and technology, to see how we can unlock more of our copper units more quickly at attractive returns. We're doing something similar in nickel. Now, as to exactly where copper growth lies in the portfolio, it's between the Escondida mine, the Spence mine, where we recently undertook a 50-year expansion, and the Olympic Dam mine. Now, close to Olympic Dam, we have a deposit called Oak Dam, recently discovered. Drilling continues underway at that deposit, and so far it's positive. So between those three, we do have good growth ahead of us over the next 5 years basis existing investments, and beyond that time horizon, I'm confident we're going to be able to develop more options between existing assets, exploration, and early stage entry.
Mike, David here. Then your outlook then on the copper market, do you think we'll need more of this stuff these next 12 months, or do we have to start paring back our expectations because of the growth outlook?
Well, so long-term outlook for copper is really strong, both for copper, nickel, and of course potash. And that's off the back of these unstoppable global trends of decarbonisation, electrification, population growth, increasing standards of living. All three of those commodities play to those thematics. Now, what happens over the next 12 months really does depend on that global growth outlook that we were speaking about earlier. We believe China is going to provide a bit of a growth tailwind, but we do expect we'll see slowing global growth elsewhere. Over the short to medium term, we expect there's going to be a bit of oversupply in copper, but then towards the tail end of the decade, we expect the market to move back into balance, the world to need more copper projects, and that to be supportive of pricing.
Mike, I want to ask you about Queensland. I know BHP is planning to open a metallurgical coal mine there that's going to run for 90 years. Can you maybe explain that a little bit more about how is this compatible with net zero targets, and do you really plan on really opening it?
Oh, okay. So I should be clear. I think what you're referring to is the Blackwater South project, and there was recently a bit of press over the fact that there was a process underway to seek relevant regulatory approvals to proceed with an investment. That's very different from triggering an investment. And the way these approvals processes work is there are multiple years in the making. So that's an effort that we had underway previously. There's recently been some changes in Queensland that has seen us pull back on further major investments there for now. But that's not because we see the prospects for certain types of coal for steel making as not being attractive going forward. We believe that for certain qualities of steel making coal, the type that BHP is now focused on, that actually there's going to be increased demand as steelmakers seek to decarbonize, because whilst in the long term there will be certain steel making technologies that don't require coal, for the foreseeable future it's going to be about taking existing approaches to steel making them more efficient. That's going to require better qualities of coking coal, and that's the bulk of what BHP produces in the coal space currently.
And you've pledged $4 billion to be spent on that decarbonisation process between now and 2030. Can you give us details on how that money is going to be deployed?
Sure. So this is something BHP has been focused on for many, many years now. So we already have one of the lowest emissions intensities from an operational emissions perspective in the industry. We've committed to reducing by a further 30% in absolute terms by 2030. So even as we grow the underlying business, we're saying we're committed to lowering operational emissions by 30%. We achieved a big improvement over the past 12 months, down by over 20%. And what's allowing us to do that is a shift towards renewable power to supply our operations. And we made some bold moves in Chile a few years back that are now paying off in terms of reducing the emissions footprint there. We've made some good inroads in Australia as well. And what we're saying is that to get to that full 30%, which by the way is a floor rather than a ceiling, so we're saying at least 30% by 2030, that's going to require $4 billion. We are focused on returns. I've said previously that right now our plans show negative $500 million for that $4 billion spend. Our accountability is to improve the underlying economics of that, and so far that's looking positive. Where's the money going to go? It's going into moving to renewable power. The early stages of removing diesel from our truck fleets on site, and our operational emissions are 40% power, 40% diesel, 20% other, and it's really in the power and the diesel category in the near term that we're going to be looking to invest that capital.
Battery metals and the super cycle there. Have your views changed on that since we last spoke? I think I last asked you that in February.
Look, the views for the battery metals complex haven't changed. We see that as being attractive long term. There's certain metals or opportunities therein that we see as being more compelling for BHP, and specifically nickel. And so we have, just as we spoke about in copper earlier, we're looking to develop more options in our nickel portfolio, and that comes through the existing asset that we have in Nickel West, as well as through exploration and early stage entry. So we've taken a number of steps forward on that in the past year, and we remain very optimistic about nickel, as we are with copper and potash.